Hi, I'm Barbara Carr, Senior Mortgage Officer with Hometown Bank of the Hudson Valley, and also very proud to serve on the Board of Directors here at ARDAC. I'm going to talk to you today about qualifying for a mortgage. I'm sure you've heard the saying, if you're breathing, you can get a mortgage. Well, not anymore. You have to be more than breathing, and that's a good thing. Too many people were given mortgages that they really couldn't afford, and that contributed to the recent credit crisis that we've experienced over the last few years. Today, lenders have gone back to more traditional underwriting to qualify potential borrowers. They look at three major factors: credit, collateral, and capacity. Credit, without doubt, is the single most determining factor in qualifying for a mortgage. To get a mortgage, you have to have a minimum credit score of 640. Keep in mind that lenders look at credit scores from all three major credit repositories: Experian, Equifax, and TransUnion, and they'll use the middle score of those three. And to get the best fixed rate mortgage available on the market today, you have to have a minimum credit score of 700. If you think about it, it makes sense. Your score indicates your past credit history. It's a good indicator that you've paid your debts as agreed or not. And a lender needs to have reasonable assurance that you're going to pay them back on time. The next thing lenders consider is the collateral. The collateral is the house that you want to buy. They need to know the true value of the house, which doesn't always coordinate with the purchase price. Lenders will hire a licensed real estate appraiser to make an assessment of the house. They'll determine the true market value. They do this by comparing it to at least 3 other properties as similar to the purchase property as possible. And they compare it based on the houses that have been sold in the past 6 months. They want the house to be in the same neighborhood if possible, but at the very least in the same school district. Then they make adjustments for the amenities, like central air conditioning or an extra bathroom, comparing that to the subject property. They start out with the sale price of each comparable and make adjustments for extra or missing amenities. They end up with an adjusted price. In a perfect world, the average price of those 3 comparables would be the market value of your property. A conventional conforming mortgage is available for 80% of the appraised value or the purchase price, whichever is less. If you're making a down payment of less than 20%, you can still get a conventional mortgage, but you'll need to pay for private mortgage insurance. This is an insurance that you pay for that protects the lender, and you pay for it in the form of an escrow payment each month along with your mortgage payment. There are other mortgage programs available which require less down payment, and some of them even provide 100% financing. But the lender is always more comfortable when the borrower has some funds to contribute to the purchase. The next factor a lender will consider is your capacity. This is where they compare your documentable, verifiable income to your monthly debts, including the mortgage payment, 1/12 of your real estate taxes, and 1/12 of your homeowner's insurance. Lenders like to see debt ratios at 40% or less of your total gross monthly income. And keep in mind that income has to be reportable income. It can't be cash that you're paid on a second job. Lenders use stable monthly income to calculate your debt ratio. This means the income has to be consistent. If you're in a commission sales position and you just had a great month, they don't use that month's figure. They look at your commissions over the past 24 months and take an average of the 24 months. If you had a large bonus one year and a small bonus the next year, they'll use the year that you had the small bonus. It's always worst case scenario. To use rental income to help you qualify, you have to have a 2-year landlord history. You have to have a detailed documented record of receiving that rental income for at least 2 years. And it has to be claimed on your tax returns. Lenders want to see stable employment. You have to be employed at the same job for at least 2 years, or at least in the same line of work. Conventional mortgage programs like Fannie Mae and Freddie Mac have their own guidelines. Lenders have to comply with those guidelines, and there's no wiggle room whatsoever. FHA, USDA, Sony Mae, VA, they all have their own guidelines. Some are more flexible than others. And some lenders, like Hometown Bank, also offer portfolio mortgages. Those are mortgages that the banks keep in their portfolio, and they get to make the rules. They have their own guidelines, they use their own money, they have the ability to be flexible if it makes sense. If you're considering buying a home, it's best to get pre-qualified by a competent mortgage professional. And it's best to go to a lender like Hometown Bank who has all the mortgage programs available to offer you. It's the job of the mortgage professional to find the best program to meet your individual needs. A borrower with an 800 credit score and 0% down payment will probably be able to qualify for any mortgage they want. a 20% down payment. If you have a 650 credit score and only $5,000 to work with, you're really going to need the assistance of a qualified mortgage professional to help you get the best mortgage program out there. When you meet with a mortgage professional to get pre-qualified, be prepared to bring your most recent pay stubs, 2 years worth of W-2s, and 2 most recent bank statements. You're going to need to explain any large deposits made into your bank accounts. Legitimate large deposits are totally acceptable, but be prepared to show documentation. For example, if you just sold a vehicle, be prepared to bring a copy of the bill of sale and a copy of the check where the person paid you. Lenders want to see a paper trail for everything. The more paper, the happier they are. With interest rates at historical lows and incredible home prices on the market, this is a great time to think about purchasing a home. If you need assistance or would like to get pre-qualified, please call me. I'm very happy to help you. You can reach me at 845-258-8068 or feel free to contact me through ARDEX office.